what are some deductions that we can take out as business owners? Just give us
Okay.
some examples.
And with the cleaning business in general,
Yes.
the different equipment and stuff that you have to purchase, all right, it has to be depreciated over a given time. Now, as of 2022, you were able to take up to 100%. And I'm looking at my sheet here so I won't forget nothing. Okay, so you see me looking at my other, looking to the left, I have another screen right here. All right, so I just took a 6-hour tax update in a 3-hour test. And my brain is like, but in that update, it says that for items that were purchased and placed in service all the way through 2022, you were able to take advantage of the bonus depreciation from 17 to 2022, certain dates up in there. And you were able to take the advantage of the bonus depreciation, meaning if you purchase something to help with your cleaning, it costs you $10,000. You're able to take that $10,000 a one-time deduction, bonus depreciation, but that expires after 2022. So if you purchase something this year, place it in service in 2023, you're only going to be able to do 80%. In 2024, you do 60%, so it declines from there. But in addition to the bonus depreciation, you also have your regular depreciation, your special depreciation, which is something that's always forgotten about. So you want to keep track of the equipment that you're purchasing so that you can take advantage of these deductions, depreciation deduction. And another thing is the supplies. You spend a lot of money on supplies, cleaning supplies. So you want to make sure that you keep up with whatever you're spending so you can get that as a deduction. If you purchase it from a warehouse, the warehouse may have the ability to print you out a yearly statement. It wouldn't hurt to ask if you don't already have one, so that you can have proof of what you actually spent and you can keep that record. So if you should get audited, then that'll be available. And the reason why I keep saying get audited, because the IRS hires so many people this year, and I know they ticked off all these scams going on with PPP and EIDL scams and stuff like that. They're going to be hitting people hard with audits. So you want to make sure, especially business owners, so you want to make sure that you have your ducks in a row. Okay.
Exactly. All right. Yeah. So what about food? Deducting food, from your expenses. Like what's the limit on that? Is everything deductible? Like
food is tricky, because the one thing about, you don't want to get caught up with the food because it's really tricky. The one thing about food is if you're just purchasing food to feed yourself while you're on the job, then that's just buying lunch for yourself. Mm-hmm. But if you're buying dinner or something for a customer, if you're trying to get a contract and you're taking that customer out to dinner or lunch or breakfast, then that's when you can talk about deducting. Okay, unless you are away from home. So if you're in Savannah and you have a client that's in South Carolina or Hilton Head, wherever the resorts are, Airbnbs, or if you have those type of contracts and then you're purchasing dinner or breakfast or lunch out there, then you're away from your home. Okay, so it'd be a lot easier for you to claim that as a deduction and explain that deduction.
Right.
When you're away from home.
If you're gonna do an employee dinner or anything like that, make sure you video it, make sure you take some pictures, any type of thing that you can attach with that receipt, just in case. So you can, hey, on this date, you have long as I feel like is the more receipts you have behind whatever you're doing, the best. So when it comes for you, you can say, here go the pictures, here go the footage, here go the receipt. Yeah. I was here, this was it. Okay.
You can do like a safety bonus meal or something like that. Yeah. Or a meal for employee appreciation, and have your employees all sign in, keep a log, hey, this is employee appreciation, everyone sign in, so that can be your proof, of what you're paying for your meals and stuff like that. But the IRS has gotten a lot stricter when it comes to meals within the last few years because of people, you know, taking advantage of and stuff like that. So when I go, like I was just in Indiana, Missouri, a few months ago with my full-time, I had to use my corporate card for my meals, but then I used my personal card for my drinks. And when I was in Vegas, I did the same thing. You know, I used my business card for my meals and stuff like that, but I use a different card for my drinks. So just in case if I should get audited, I'll be able to say, hey, you know, I was in Vegas and I paid whatever for my meals because I was there attending a tax conference. And it was 8 a.m. to 5 p.m. tax class, one after another, after another, after another. So I'm gonna eat good. That's one thing I'm gonna do.
I'm gonna use this card.
I'm gonna eat my food, but I paid for my drinks separately, so it wouldn't be, you know, because you can't. The IRS not gonna reimburse you for drinks.
Yeah. Oh, yes, you're right about that.
Yeah.
Okay. Good. Okay. So another most commonly asked question is about the home office. Okay. Like, how do you go about writing off your home office? What actually qualifies for a write-off when you talk about your home office? Is it the whole house? Is it the living room? What if your office is connected to the dining room? Like, we we get these questions all the time. Like, how much square footage am I writing off when it comes to my home? Or how do I even go about doing that?
Well, with your home office, it has to be a dedicated space for your business. So it has to be like a dedicated room. You can't have your dining room here and the office here unless you're using the whole space for your office. So that's the first thing. You want to have a dedicated space, okay? And there's different rules that apply to the time it takes, and I had a lot of questions on it, the time it takes, the time that you spend in that space on your business, or if you're conducting business, having people come to your home, this area, to conduct business. So there's certain rules that apply, like test questions apply to determine whether it's a home office, consider a true home office or not. Now, there are two different deductions, right? You can do a regular deduction where it's $5 per square foot, up to 300. Okay, so that's the max. So that's a automatic $1,500 deduction. But if you don't go that route, then you do the deduction where you can enter your utilities, the repairs and stuff you made, and it would allocate it based on the square footage. So it would ask you for the total square footage of your home and the square footage of the space that you're operating your business in. Okay. And that calculation will use to deduct like a certain percentage from your utilities to use towards your business, from your including like internet, depends if you have a mortgage or not, depends if you're renting or not. You know, there are different expenses that you can write off pertaining to that office space. But the most important thing is to say that you have that dedicated space for your business.
Okay. So is the IRS actually knocking on people's door to see, like, let me measure this space and see if whether you lied or not?
No, they're not doing. I don't think they're gonna do that. But you know what? You never know. And I'm over here looking because I have a term I would like to use, and it's not in my brain right now. But okay, so it's like an exclusive use test.
Okay.
And they just might knock on your door because you never know. You know, the auditors, shoot, they might ask for like a plan or a drawing of your home or something. You never know what they're gonna ask for. But there's an exclusive use test. Okay, that is used to determine whether that space qualifies as a home office space. Okay, and some of the factors is the amount of time spent at each place where you're conducting business, the relative importance of the activities performed at each place where conducting, business. So there's a lot of different factors that go into that. The form is 8829, and in addition to the deductions, the utilities and insurance. You can also deduct your security system. That can be deducted, renter's insurance, if you're renting. So, and the method I'm speaking of with the $5 times 300 square foot is the simplified method.